Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden, and these are your top stories. Global stocks tumble on stretched tech valuations, and as doubts grow over a Fed rate cut next month, China adds to the gloom with a bevy of weak economic data. Tariffs rethink. The US president set to cut levies on groceries as he seeks to address the rising cost of living following last week's election wins for the Democrats. Plus, the pound slides following reports that the UK Chancellor is considering major U-turns on planned tax rises. A very good morning. We end the week with a little luxury. Breaking earnings coming out of Switzerland from Richemont. Their first half operating profit beating estimates. This is as the shares have been up 17% so far year to date. They say that first half sales have come in at 10.62 billion euros. The estimate was for 10.42 billion euros. And first half sales at a constant FX of plus 10%. The estimate was for 6.94%. So a big beat there from Richemont. This is, of course, the Cartier owner. And luxury seeming to have quite the comeback thanks to China so far this quarter. So we'll keep an eye on those shares at the open. But here's what's happening in the broader markets this morning. Happy Friday to you. You've got these doubts about Fed rate cuts knocking Asia stocks this morning after 4 straight days of gains. A December cut on a knife edge in these markets' eyes. So the MSCI Asia Pacific Index down 1.4%. We've also got doubts about stretched tech valuations weighing on sentiment again. But still, it has to be said, we've got global stocks heading for a 4th weekly rise in 5. And so futures are pointing higher, just a touch, stateside, though lower here in Europe. Now flip the board over and you can see Bitcoin sinking further this morning, further south of that $100,000 mark, dragged down by this fresh wave of risk aversion. Down 1.3% currently. But gold set for its best week in a month as that gap in US data clouds the outlook. Gold up 0.4%. We're at $4,188 a troy ounce. The pound falling after a Financial Times report that the UK Chancellor is considering not raising income tax after all of that pitch rolling. And oil surging as traders weigh the risks to Russian flows from US sanctions. So $64 a barrel, up 1.6% is where we trade on Brent. Let's dive into how Asian markets are faring now. Winnie Xu can bring us an update from Hong Kong. Winnie.
Morning, Lizzie. Happy Friday, but not so much of a happy session here in Asia. Today, we are seeing the MSCI Asia down about 1.4%, and that's coming after 4 days of gains. So still that concern around the high valuation for technology shares and also traders walking back that bets around the Federal Reserve to cut rates. And here you can see the tech-heavy Kospi index is down 3.5%, even after the government stepped up with the support for the weakening Korean won. And similarly, Japan's Nikkei 225 and Taiwan's TAIEX index both down over 1.5%. Now, so overall, the sentiment here is pretty weak with pretty much of a risk-off mood in the region. Now, flip the board because another key focus we have today is around China's economic data, which actually weakened across the board. So here you can see the highlight. The biggest shock that we have got is that number around the fixed asset investment down 1.7% year over year, and that is comparing to a decline of just less than 8% previously. So it's being driven by the excess capacity demand and also the lack of fiscal stimulus. And similarly, we are seeing a bit of a weakening trend when it comes to the retail sales. Growth is 2.9%, but that compares to 3% previously, slowing for a 5th month. And for industrial production here, the numbers are still below 5%, reflecting also a weak export demand. While overall, it means that the government may be rolling out more stimulus to support. It also shows that the reflationary trend for China still remains a rocky one. Back to you, Lizzie.
All right, Winnie, thank you so much. Walking us through that Chinese data dump. Winnie Su in Hong Kong. Well, turning to the macro stateside, there are growing doubts that the Fed is going to cut rates next month, with Governor Neil Kashkari saying that he's still undecided. Kashkari didn't support the last rate cut, and he says it could go either way at the next meeting.
We have inflation that's still too high, running at about 3%. Some sectors of the U.S. economy look like they're doing great. Some sectors of the labor market look like they're under pressure. How do we make sense of these mixed signals?
Let's get more now with Paul Dobson, Bloomberg's executive editor for Asia markets. So, Paul, it looks like this next decision, given the data is really not been coming through this month, is on a knife edge.
Good morning, Lizzie. That's exactly right. Where have all the doves gone, I think, is what people are asking at the moment. We've heard a lot from members of the Fed decision-making committee who have been saying we didn't even really want to vote for the last cut, but we did it anyway. You know, make of that what you will. But saying that they're minded to focus more on the inflationary risks in the US economy than they are on the slowing labour market when they make that decision in December. Kashkari himself doesn't matter just now for this meeting because he doesn't vote again until next year. But all the same, that sentiment that he's giving off is kind of the vibe that we've been picking up from a bunch of them, that they're really a little bit more fixated now on the prices, the impacts of tariffs on the economy, and a little bit less worried about the labour market, relatively speaking. You know, they did tell us over the last couple of meetings that there were insurance cuts, you know, safety cuts, rather than a desperate need to get interest rates lower rapidly. And we may learn a lot more next week. We do get the Fed minutes. That's one thing that will be released on schedule, we understand. So that will enlighten us a lot more. But maybe, you know, it will do something. At the moment, the market is pricing very much 50-50, as you said, knife edge for December about whether they move or not. So we might get more of a sort of sighting of which way they're leaning over the next couple of weeks of trading.
Well, Paul, we've also learned that the US October jobs report is going to be released, but without a reading of the unemployment rate. Does that matter? Yeah, well, it gives you another sense of the lack of clarity that we've got out there at the moment. Okay, so I think there's a couple of things, you know, to take away from, yes, the shutdown ended and we've got the reopening and the market was happy with that for a while. And now everybody's starting to think, well, hang on a second, it's going to take us another week before everybody kind of gets back to work and people start to actually get their pay. That's quite a bit of a pain. And then they're thinking it's going to take us weeks and weeks before we start getting all of the data and can actually see what's been going on in the economy. And what's been going on in the economy probably is that some people have lost their jobs, which we know about, and they need to sort of get brought back into the fold. And also that people probably have had their confidence knocked a little bit because of the shutdown, and spending has been down as well. So, well, it's a lot of uncertainty out there, and that's not going to help the Fed, of course, when it's making its decision. But what I think that, you know, we can see is that this sort of narrative about the K-shaped economy is still coming through. The idea that poorer people are really having a rough time of it at the moment. And you see some rhetoric from the likes of Trump coming through over the past 24 hours on the idea that maybe they will take some steps to ease food inflation costs through the tariffs, make life a little bit more easier to help with that affordability issue. So maybe keep an eye out for some more on that as well when we go through into the weekend. All right, Paul Dobson, have a good weekend. On that note, Bloomberg's executive editor for Asia markets, we thank you. Well, I'm looking at the pound sliding down 0.3% to $1.31 after Bloomberg learned that UK Chancellor Rachel Reeves is considering dropping plans to raise income tax and a slew of other levies at the upcoming budget. She's also looking again at whether to proceed with an exit tax on wealthy people who would be leaving the country. Let's get more with Bloomberg's FX and rates reporter Michael Wilson. Mike, it looks like the market doesn't like this. Is that the right conclusion?
Oh, I think that's definitely the conclusion at this stage. The reaction, it looks like a small reaction. That doesn't mean they haven't. They're not preparing themselves for something bigger tonight, possibly into the weekend. Option volatility has picked up, it accelerated into London. So if you look at straight at the options market, 1 week and 1 month volatility, the 1 month, which includes the budget being handed out on November 26, that's motoring along. So I think there is a lot of apprehension out there, and I don't think we have seen the full reaction in the pound per se, until everybody's in, London's in, New York's in tonight, then you might get a better idea.
Well, to be clear, does the Chancellor need to break the manifesto in order to keep the gilt market happy?
Well, it's that two-sided fiscal coin, spending and revenue. If she breaks the manifesto, she probably, wins over the markets. But to borrow from Prime Minister, it would be politically courageous if she did that. So it might be her last great act. I think that she's treading a very fine line, but she's very mindful. She doesn't want to have a Liz Truss moment, so to speak. She's very mindful of market reaction, and I think that that could be governed by 10 and 30-year gilt levels. If she maybe does a combination of the two, where dials back on investment a little bit and trims around the edges, but stays away from the middle class, the average worker. Because that's politically too sensitive, so she'll have to just work out the combination, which politically the market could handle, and also from a debt level, I think it's a 30 or 35 billion pound hole she's got to fill. I do think it's interesting that she's telegraphed it. It's been reported 2 weeks out from the event, or almost 2 weeks, so the market's got a lot of time to chew on it. So by the time that the budget's handed down, she's hoping that the reaction isn't as big and as bad as it has been in the past.
Well, who do you want to let down more, the bond vigilantes or the left wing of the Labour Party? You can't please all the people all the time, Michael. As Abraham Lincoln said. Bloomberg's FX and rates reporter Michael Wilson, we thank you so much for that analysis. Well, turning to the US, President Donald Trump is readying substantial tariff cuts designed to address high food prices. He's also set to unveil trade deals with Latin American countries to reduce tariffs and barriers on common grocery items. The push comes after key electoral victories for Democrats last week in state and local races, where candidates stressed affordability concerns. For more, I'm joined by Bloomberg's news desk editor Balazs Pens. Just talk us through, Balazs, what more we know about these tariff cuts.
Yes, good morning, Lizzie. So this is shaping up as a series of moves by the White House, which are all targeted at food prices. The first is this batch of trade agreements with Argentina, Guatemala, Ecuador, and El Salvador, which include tariff cuts for some food items, including coffee and bananas and beef, a lot of which does not grow in large quantities in the U.S. And then we also heard that there's discussion within the White House about furthering those cuts, including other countries within a similar framework, including some of the countries that already have trade agreements with the U.S., so providing some carve-outs for similar food items. Some of the reporting suggests that citrus products might be part of this agreement. Bananas and coffee and beef are again, some of the products that they are focusing on. So this does look like a concerted effort of thinking in the White House about how they can address grocery prices that have been such a concern for Americans.
And what does it say at this point, Balazs, about the White House's political priorities that they're having to do this?
Well, I thought it was really interesting, Lizzie, that when the president signed the bill that ended the shutdown, which was ostensibly a big moment of political victory for him, he used that moment to talk about the cost of living, affordability, as something that he really wants to address. So clearly the Republicans see this as a risk for them, and they know that the Democrats have been able to leverage the issue of affordability, those kind of proverbial kitchen table issues before the off-year elections, and that paid huge political dividends for them. So clearly this is something that the White House thinks they need to address. Now, the fact that they need to do that by tweaking one of President Trump's other signature policies may be difficult to thread politically, but this is something that they are really focused on, and they hope that lowering some of those grocery prices will be helpful to them politically.
Again, you can't please all the people all the time. Bloomberg's news desk editor Balazs Pens, thank you so much for the update. Have a great weekend. Well, let's take a look at what else we've got on the day ahead before we hit that weekend. At 10 a.m. London time, we get the latest euro area trade and jobs data. Then after market, we have S&P reviewing South Africa's credit rating and Goldman expecting an upgrade only to a couple of notches below junk, but still a significant milestone for South Africa if it comes. And then ahead of next next week's G20. Bloomberg's hosting global business leaders in Johannesburg at the Bloomberg Africa Business Summit. Bloomberg TV's coverage starts on Tuesday, but I'll be on the ground with our chief Africa correspondent, Jennifer Zabasaja. Then later on today, we've got a load of Fed speak. We have the Kansas City Fed President Jeffrey Schmidt, Dallas Fed President Lori Logan, and Atlanta Fed President Raphael Bostic. So plenty more to come. And you can get a roundup of all the stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find that newsletter by going to D8YB Go. Well, coming up on the programme, evidence that wage growth is stalling in the UK, and more on what that could mean for the Bank of England. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, we have had earnings out of Siemens Energy. It's been an incredible year for the company. The share's up over 100% so far year to date. And indeed, they have upgraded their outlook for the next financial year in these earnings. They've hiked their midterm financial targets off the back of demand for gas turbines and data center equipment, as well as the progress that's happened on restructuring their Gamesa wind turbine unit. And I'm pleased to say we are now joined by the CFO of Siemens Energy, Maria Ferraro. Good to see you, Maria. Welcome to the programme. Thank you for making time. As I say, it's an incredible year so far for you, up over 100% year to date on the shares. You've just made this big upgrade to your targets. Walk us through what's gone so well over the past quarter and really how that sets up your profit margin expectations into next year.
Hello, good morning, Liz, and thank you for having me. Yes, we've had a very strong year indeed. As we saw in Q4, for example, we had a very strong finish. Both in revenue and in orders, we continue to see tremendous growth. And of course, we've returned to profitability. This is something that was important to us for the entire year and ended at a 6% profitability. And free cash flow, I mean, from a CFO perspective, free cash flow is very important. And this, of course, is seen in our quarter and in our year end with over $4 billion in cash. So maybe looking backward to your point, we've stabilized our wind business. We continue to see growing demand for electrification and power, and both our gas services and our grid technologies business continue to benefit from that. And looking forward to your point on our outlook for next year and our targets for 28, we have $138 billion in backlog, Liz, now, which is the highest we've ever had. And certainly that gives us visibility into the future and enables us to see, you know, how will this essentially convert into revenue, profit, and cash for the future. So we're very pleased with our fiscal year 25 figures. We're excited for fiscal year 26. We've upgraded our outlook. We now look at 11 to 13% revenue growth and 9 to 11% profit for fiscal year 26. So yes, we're well positioned.
All right. Well, how long do you expect this current momentum in gas turbine orders to sustain itself?
Yeah, it's a very great question, and everybody's looking to see how to estimate that. But certainly from our perspective, we see that momentum continuing till the midterm target, which is for us in 28, and also foresees growth well into the end of the decade. And I think very, very clearly it's based on the electricity demand. And that continues to grow. And it's in various areas. It's not just in data centers. It's just across all of our portfolio, actually. And that's what we see. We see the demand is far outstripping supply. And we're booking now in certain businesses, past 28 and beyond.
Yeah, you really are a fascinating barometer of AI demand right now, Maria. I also just want to ask about Gamesa. What milestones should investors be tracking in 2026 to really gauge Gamesa's break-even trajectory?
Yeah, so first of all, I'd like to say the team did outstanding job in fiscal year 25 to really stabilize. We knew, and of course our guidance reflected that, we knew that we'd still be, let's say, making ourselves through the transformation. But it's going to be more of the same, Liz. And what Vinod Philip, the CEO, continues to say, it's step by step, day by day, really ensuring that we're getting our production facilities up and going and ramping up. We continue to ramp up, but also productivity. So what we're able to actually pull through those facilities, they've increased, for example, in one of the facilities here in Germany, they've increased production year over year by 30%. They're looking at things like supply chain. They're looking at how do they optimize footprint and cost. Also, with respect to expansion activities, how do we ensure that every dollar, and trust me, I look at every dollar to ensure that that is going in the right direction and optimized. And that's what we will continue to see from our wind power business. And of course, the growth is built on the offshore part of that business and the stabilization of onshore.
And we know that the German government wanted to start tenders to build new gas plants by the end of this year, but it's still in talks with the European Commission when it comes to state aid regulations. How much does that bother you, Maria?
That's a very good question, Liz. I mentioned that before. It bothers me in the sense that I think we really need to speed up. I really welcome the announcement yesterday, which indicates, hey, we will have this 8+2 gigawatt program. I think it's absolutely a step in the right direction. And it actually doesn't even matter if it's 8 or 10 or 12 gigawatts. I think the speed is of essence here. So we welcome that step. We're ready. We've been discussing this with our customers. We don't see any major roadblocks. Now we need to get the EU approval and we need to move because, Liz, these types of projects are quite complex. They take time. And if we want that power to come on the grid soon, essentially it'll take a few years. So we need to move as soon as possible. So I welcome the step. Well done. Let's move to get approval and let's get going. We're ready.
All right, Maria Ferraro with a message for Brussels. We thank you so much, the CFO of Siemens Energy. Well, coming up on the programme, evidence that wage growth stalling in the UK. More on what that could mean for the Bank of England. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:25 a.m. here in London, and the Ukrainian capital has come under attack by Russian drones and missiles. The mayor of Kyiv has described it as a massive enemy attack and says at least 25 people have been wounded. Meanwhile, Ukraine has carried out a major drone attack, causing damage to a Russian oil depot on the Black Sea. That news sending oil higher this morning. Elsewhere, a closely watched survey has found that UK wages barely grew last month, offering the Bank of England more confidence that inflationary pressures are easing. KPMG and the Recruitment and Employment Confederation say that demand for staff has continued to weaken and the number of candidates seeking work is rising strongly. That data coming just weeks before the Bank of England's December rate decision. And the BBC has issued a formal apology to US President Donald Trump for misleading a misleading edit of his January 6th speech. But the corporation has rejected his billion-dollar compensation demand, saying that there is no basis for a defamation claim. It follows accusations from Trump's lawyers that the clip was deliberately altered to influence the US presidential election. Elsewhere, Blue Origin has launched its New Glenn rocket for the first time, successfully deploying 2 NASA spacecraft to Mars yesterday. The 320-foot booster returned to Earth and landed on an Atlantic barge, a key milestone which puts the Jeff Bezos-backed company on track to challenge the grip SpaceX currently has on the aerospace industry. Well, a reminder that the next episode of Leaders with Francine Lacroix premieres today. Catch her conversation with the Franklin Templeton CEO Jenny Johnson at 5:30 p.m. London time, right here on Bloomberg Television. But coming up, how AI is reshaping the defence industry. We'll be speaking to the co-CEO of Europe's biggest defence startup, Helsing, plus exclusive interviews with the UK head of Palantir and the managing director of General Catalyst. Bloomberg Tech Europe is coming up next. This is Bloomberg.